Welcome back. Still around about the 25,000 mark is where the index is. So still some hesitation at the higher levels. The dips are being looking to be bought into, but around 24,970 is where the index currently lies. Rohit Srivastava from IndiaCharts.com is joining in now. And Rohit, good morning. Thank you for joining in. You were mentioning that you are expecting this move to go up to 25,300, which is the 78.6% retracement of the entire fall that we've seen from September last year. If we do end up making new highs, where do you see the index going to, and by when do you expect the new highs to be formed?
So broadly, I think we should consider that we are in an uptrend that can last for several weeks and maybe even months. Typically, this period, when you start from March all the way into June or July, tends to be bullish. So we are in a seasonally bullish phase, which may continue to see us make higher highs and higher lows. So we cannot really bet on speed. What we can bet on is that the direction is likely to be upwards, and we are slowly going to gravitate towards making a new high. So 25,300, which I mentioned, is just the first important hurdle from a retracement perspective that we need to really get past. The odds of that happening have slowly been increasing, especially if Bank Nifty is able to pull off a breakout above 55,700. Then I think the possibility of that happening increases, which means then the Nifty also would stretch towards the 26,200 mark, where we made an all-time high. So we do need, of course, various sectors to participate, but I think there's a rotation from one segment to the next segment slowly happening, and that is what will keep driving this move higher.
Okay, once this 25,300 mark is crossed, then the all-time high is what, 1,000 points away from that level, 26,277. Rohit, what about the global setup? You look at the global indicators very closely, the S&P 500, the dollar, the yields. Now, most of them, generally there was risk on in the global markets on the back of the tariff de-escalation narrative. Yeah. But now trade fears appear to be back. So what's the setup? Is it supportive of things looking up and rosy, at least till July?
So I'm not sure trade fears are really back, because even what he did today in terms of Europe pushing the tariff discussions further down the line, I think that's going to be the process, because it takes time. One thing is to say that you have a 90-day time horizon, but essentially you want things to work out. You don't want things to fall apart. And so if it takes time, dates are going to get pushed ahead till you get what you want. So I think broadly it's accepted that, the US wants to collect a 10% on the face of it, fee for all the imports that they are doing. And apart from that, they may have various, requirements or things that they want to achieve, which is what they will try to negotiate. So I think broadly it's moving in a positive direction for the market. Now, if we just remove tariffs and we remove geopolitics like the war or Russia, Ukraine, etc. from the picture, then we are left with only one macro risk, and that has been the bond market. So that is the only thing people are worried about, because bond yields were rising. Now remember, we are at the level at which the 30-year bond yield, the last time it was here was in October of 2023, and then moment it backed off, you saw one of the strongest rallies in the market in PSU stocks, etc. And we are back at the same level, except that this time the downward momentum in the bond market is very, very slow. So somewhere, the bond market is also losing its downward momentum. It's got some reaction, but the reason for that would be that you can hear that the Fed is eventually going to move towards lowering interest rates. And since they've already moved to cutting QT, means at some point of time, they may even have some kind of a bond buying program, whether the same or with a new name. And that, I think, expectation is why the bond market is not exactly falling apart. The hope is that first, the other countries, you've already seen Germany and China start stimulating and cutting interest rates. India started to do that from February.
Right.
Now the question is, when does the US do it? Because that's the last man standing. And it's becoming slowly and slowly more visible that we are closer to that point that they will flip. And so that is why the last risk that was there for markets, which is some kind of turmoil from the bond side, is likely getting moved out. And I think that's why risk is coming back to markets.
Right. One final question, Rohit. You'd mentioned that the Nifty Bank is positioning itself for 61,000. By when does that happen? Once it breaks above 55,700? And two, being that you mentioned PSUs are one space where you find value, being the low risk exposed sectors. Where within the PSUs are you finding value? Be it railways, defense, OMCs? Where are your picks here?
Yeah. So first, the Bank Nifty typical rallies, what we've seen at least since March, has been 2 to 3 weeks for each leg. So I will give it around 2 to 3 weeks to get past 60,000 as far as the Bank Nifty is concerned. Now within PSUs, so they broadly these are areas where you've seen a huge correction also. If you just go by the PSU index, the RSI indicator at one point of time being well over 90 at the weekly level is now fallen all the way to 30 and then started to bounce from there. So broadly, I think PSU stocks are done with their correction. And it's been a pretty broad-based participation. So it's not like one segment or the other. Various segments have participated in that move, whether it's the power finance companies, whether it's those related to the commodities sector. So that includes the metal names. It does include OMCs. So it includes sort of a lot of stuff. And most of them are core sector industries, right? So what we are really looking at is a turnaround in the core parts of the economy. And somewhat driven by the metals cycle also. So, when we talk about bond yields and the dollar, what we're really looking at is a falling dollar triggering rising commodity prices. So we saw copper prices jump up quite a bit on Friday, which is why you're seeing some enthusiasm again in metal stocks, not just the steel companies that were doing well last week, but also those in the aluminium and
Right.
copper space specifically. So I think it'll become pretty wide when you think of the PSUs also, because various segments are parts of the economy which will start moving.
Right. All right, Rohit, thank you so much for sparing time and joining us today. Looking forward to having you more often on the platform. Rohit Srivastava of IndiaCharts.com. Take a short break. Up next, we get you a quick chart check and some trading ideas with Aditya Agarwala of Invest for Edu on the other side. Stay tuned.